According to recent research from Cambridge, certain nations' restrictions on Bitcoin mining might have a negative effect on the environmental footprint of the cryptocurrency. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. September 27, 2022. According to Cointelegraph's tweet, hydropower's share in the electricity mix of #Bitcoin plummeted from 34% to 15% over the past 2 years, while the share of natural gas surged from 13% in 2020 to 23% in 2021. Natural gas and nuclear energy have emerged as the energy sources driving Bitcoin mining with the greatest rate of growth, according to new statistics. The electrical mix of Bitcoin has significantly altered over the past few years. The Cambridge Bitcoin Electricity Consumption Index, or CPI, a source of data devoted to Bitcoin mining, received a significant upgrade on Tuesday from the Cambridge Center for Alternative Finance, or CCAF. Almost two-thirds of Bitcoin's entire electrical mix, or more than 62%, was reportedly made up of fossil fuels including natural gas and coal as of January 2022, according to statistics from Cambridge. As a result, 38% of the energy used by Bitcoin came from sustainable sources. Latest research shows that coal alone was the primary source of energy for Bitcoin mining in early 2022, accounting for up to 37% of the cryptocurrency's overall electricity use. Hydropower was shown to be the most abundant source of sustainable energy, accounting for around 15% of all available resources. Despite the fact that coal and hydropower are still a big part of the energy mix used for Bitcoin mining, their percentages have been declining over the past few years. 40% of all Bitcoin mining will be done using coal power in 2020. Between 2020 and 2021, the percentage of hydropower fell from 34% to 15%, more than halving. On the other hand, during the last 2 years, the use of nuclear energy and natural gas for Bitcoin mining has significantly increased. The proportion of gas in the Bitcoin power mix climbed from around 13% in 2020 up to 23% in 2021, whereas the proportion of nuclear energy rose from 4% throughout 2021 to over 9% in 2022. Cambridge experts stated that the move of Chinese miners in 2020 and 2021 was a significant factor in the sudden changes in the energy mix for Bitcoin. A significant decrease in the proportion of hydroelectric power in the Bitcoin energy mix was caused by China's ban on cryptocurrencies in 2021 and the following miner migration. Several hydroelectricity-powered cryptocurrency mining facilities were closed down by Chinese authorities in 2021. The study concluded that Bitcoin's environmental footprint was significantly impacted by the Chinese government's prohibition on cryptocurrency mining and the movement in mining activities to other nations that followed. The experts also noted how regional variations in the Bitcoin electricity mix are significant. Kazakhstan and other nations continue to rely significantly on fossil fuels, whereas Sweden and other nations generate nearly 98% of their power from sustainable sources. The spike in gas and nuclear energy in Bitcoin's electrical mix, according to the researchers, is a reflection of the country's increased dominance in the mining industry. As stated by the US based on the Energy Information Administration, over 38% of the country's total power output was produced by natural gas, which produced the majority of the country's electricity. The percentages for coal and nuclear energy were 22% and 19%, correspondingly. The analysis discovered, among other things about the most recent CPI update, that as of September 21, 2022, the greenhouse gas or GHG emissions connected to Bitcoin mining stood to 48 million of metric tons of carbon dioxide equivalent or MTCO2e. The predicted GHG emissions for 2021 are 14% higher than that. Approximately 0.1% of the world's total GHG emissions, based on the study's estimations, are currently associated with Bitcoin. The index calculates that by the middle of September, around 199.6 MTCO2e may be credited to the Bitcoin network ever since creation. This figure is based on a combination of all the data discussed above. The experts emphasized that since 2018, 92% of all emissions had taken place. As was reported earlier, the Cambridge Digital Assets Program, or CDAP, a multi-year research project of the CCAF, has included work on CPSI. Among the financial organizations that collaborate with the CDAP institutionally are British International Investment, Accenture, Fidelity, MasterCard, the Dubai International Finance Center, Visa, EY, and others. The Bitcoin Mining Council, or BMC, whose data was released in July, claimed that approximately 60% of the power used for Bitcoin came from sustainable sources, in contrast to the current CDAP results. Ben Gagnon, the chief mining officer of Bitfarms, spoke with Cointelegraph in August and said that it excludes nuclear and fossil fuels, thus you can infer that between 30% and 40% of the sector is run on fossil fuels. CPSI project manager Alexander Neumueller claims that the DAP's methodology differs from the Bitcoin Mining Council's when determining the mix of power used by Bitcoin. Neumueller stated, "We detect Bitcoin miners using data from our mining map, after which we look at the electrical mix of the nation, state, or province. As far as I'm aware, the Bitcoin Mining Council surveys its members and requests that they self-report this information." He continued to remark that the study's lack of data still leaves some nuances. On the same date, September 27, 2022, CoinDesk tweeted, Thailand's Securities and Exchange Commission has sued 5 entities for creating fake volumes on crypto exchanges BitCub and Saton Corporation. Buy at Aknight Crypto. The Securities and Exchange Commission of Thailand has filed lawsuits against 5 businesses for manipulating the traffic on the cryptocurrency exchanges Saton Corporation and BitCub. The agency reportedly imposed civil punishments against 2 men as well as the Bangkok-based BitCub. The 3 violators in this case have been forced to pay 24.2 million Thai baht or $636,000 as compensation to the SEC for the costs associated with its investigation. The chief technical officer of BitCub was penalized $235,000 by the Thai SEC in August as a result of an investigation into insider trading. The regulator has imposed civil penalties on LLC Fair Expo and 1 man in the second instance involving Saton Corporation, which is also situated in Bangkok. A settlement of 12.1 million Thai baht or $318,000 has been demanded. The unlawful practice of wash trading, or the creation of counterfeit volume, is used to entice investors into making investments by giving the impression that a particular asset is much more prominent than it really is. This year, the Thai SEC has taken a more confrontational approach toward cryptocurrencies. After submitting a complaint to the police against struggling cryptocurrency exchange ZipMex earlier this month, it suspended lending and staking services in Thailand. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.